Good morning, everybody, and this is your S&P 500 day trade setups for today. So what we said yesterday is still very much in place. That is the range. We'll get to the exact levels lower down. I think we just need to add this previous swing high and the one just below it, because price often has a habit of reaching the first one and hitting the second one. So those are the three levels that we need to pay attention for support, and then we do have to pay attention to this level, which is the current high. And if you just draw a diagonal trend line along the bottom two fractals that are in place at the moment, you will get a flat top triangle. Flat top triangles are fairly rare when you're at the top of a move, but it is a consolidation phase. I'll just treat that as a range, as I said yesterday, and we need to wait to see what the Feds are going to do. I think the sentiment is that the Feds are going to have some positive news on interest rates. If you just look at how we moved last week and this week, we've just been grinding higher slowly, but nothing really to write home about. Let's just get down to the levels we want to be trading. From an hour perspective, the oscillators are grouped to the upsides, indicating that we are ever so slightly over bought, and I'm just going to bring this level down because you can see we're just above it this morning. That was the first swing high, and then you've got just above this the next swing high. This is not good enough for me to indicate that it's a break of the level. I suspect we're going to come back and find some support somewhere else. So let's just add those levels in. Now obviously we're waiting for the Feds tonight, and I suspect we're probably going to be just going sideways until then. So levels we need to pay attention to today, and to be quite honest, I probably won't be trading today. We'll wait for the Feds to finish their song and dance late tonight, and then it should set up quite nicely for tomorrow. Okay, so first level that we're looking for to the downside is 53.16. So we're looking for support down here. Second level is 53.07, but both those levels would break this trend line, but that trend line is broken already with this move sideways at the moment. Look at our oscillators, they are hovering along 53.28, so 53.30 is the level we need to break quite strongly to the upside to come back and test it. That gives you opportunities for long. Otherwise, you're looking for a pullback onto one of these swing highs, but I would prefer us to get back down to 53.16, and then you also have the outside chance of it coming down to the bottom of the range at 53.07, 5300 area. That's kind of the view that I've got at the moment. Right now, let's just put this diagonal in. So what we want to do is take it from that swing low to the swing low of yesterday. Just lock it in, come back to the 15-minute, and you're going to see if we use that as our support level, technically if we have a quick drop down to test the underside of this consolidation phase of yesterday, that would also work as well, 53.10. But this is my area, 53.16. That's what I want to see. Now remember, with any big noise event, you often have some big swings all over the place. And what you may find is a rapid move down. Buyers find this level as the level they want to get into, and then they jump in. But I wouldn't advise that. I'd just wait for, sort of 15 minutes past the end of the press conference, because that's the other thing that you notice when the Feds are talking, is it's very volatile as we digest whatever they're saying. So it's really just my advice anyway is just sit back, sit tight. It's going to pick a direction. I'm pretty confident of the direction being to the upside. I can't see them sneaking something in to say there's another interest rate hike. Maybe something along the lines of, we're holding it steady for a little while longer, which is what we're expecting. But the anticipation is we will start cutting the rates. Let's not say sooner than later, but at the moment it's later in the year. could spill over to next year, but that's also not all that bad. That might give us a little move to the downside and give us an opportunity to get in. So that's kind of the picture that I have right now. Flat top triangle forming, could be another leg down into this area, this zone of support, and then bounce back to come and test the top before the data comes out. And then when the data comes out, we should see a pretty volatile move, either to come and test the lows here and then bounce, or just break and then come back and test. That's what I'm anticipating anyway. So yeah, that's it for me. Just I'm sitting on the sides. I won't be bothering to get in on this. Pointless trying to trade this the last 2 days. If you look at, well, last 3 days actually, nothing really there for us to trade. Hope it helps, and we'll catch up with you tomorrow. Cheers for now.